Good morning, traders. Welcome to the morning update on Thursday, the 7th of April, presented by Mark Owen from Phoenix Blue. Okay, so yesterday we had the FOMC minutes, and what came out of that was nothing really unsurprising in the sense that we were already notified that potentially the rate hikes were going to reduce from 4 hikes to 2 hikes. And then if there is going to be 2 rate hikes this year, when are they likely to be? And how much of it is dependent on the global economy rather than just the data that's coming out of the US? We think one of the key phrases that actually came out of yesterday's statement was that a cautious approach to raising rates would be prudent, or noted their concern that raising the target range as soon as April would signal a sense of urgency they do not think appropriate. So by that, it was a confirmation that obviously no rate hikes are coming through April. And did we see any wild swings? Not really. So we can probably say that the market actually anticipated this kind of comment. It just cemented the dovish tone that Janet Yellen gave in her speech earlier. So what are we likely to see from the dollar? Well, I think now in all honesty, our opinion at Phoenix Blue is that we're still bullish dollar for the long term. However, we may see a continued sell-off until some other central banks come in and play their card. Obviously, today we've got Mr. Draghi speaking from the ECB. So maybe each central bank is sort of relying on one another to play their trump card. So the ECB, earlier this year, Mario Draghi said that they were going to increase stimulus from 60 billion euros to 80 billion euros per month. And they also introduced a further negative interest rate. So he's basically telling the market he needs a weaker euro. And since bringing in those changes, the euro is actually appreciated in value. So that it's kind of conflicting, and it doesn't really make a great deal of sense where the US are actually talking about raising interest rates. The only thing that's potentially stopping them is emerging markets and global economy. Now everyone else is doing everything in their power, pulling out all their trump cards to reduce the value of their currency, but yet it's appreciating on the back of, well, on the back of really a dollar sell-off. So we see where the market is right now for the euro as a potential reversal zone, i.e. to get back into dollar strength. However, the issue we do have is we've got Mr. Draghi speaking today, and that could cause some volatile swings. So if you are looking at trading euro, make sure you're trading it at reduced risk. Our standard risk for our accounts here is anything from 0.5% to 1%. I personally trade between 0.3 and 0.5%. I like small drawdowns, so when I do have that period of losing trades, it doesn't do too much damage. And when I have a period of winning streaks, well, again, I don't have the upside that everyone else does. Why? Because I prefer a smoother equity curve, and to me that's what it's all about. I like to sleep at night. I don't like these heart-raking moments where the palpitations are going through you because you've risked too much or you can't handle the amount of money that's prepared to be lost. And the other thing we're going to look at is the dollar yen. So as you know, and as we've been quite open about, we've been trading the dollar yen from 111s and 110s, looking for that possible intervention. We've been pretty successful in trading the bouncers, although we haven't actually made the returns that we were anticipating, and it's not looking likely now that the Bank of Japan are going to intervene until we see a further drop. Now, we're going to look at the charts in a minute, but on the back of that, we have to be able to be adaptable as traders. Yeah, it's okay to have a bias and it's okay to have a viewpoint of where you want to trade and how you want to trade. But at the same point, once all key levels are broken, you've got one of two things to do. You either sit out of the market and wait till you believe the market has now reached a level that you think is good for buying in either for yen weakness or dollar strength, or you change your perspective and you trade the contrarian trade, i.e. the pullback or the correction. And if you are going to do something against your fundamental bias, then I would do that at reduced risk. So right now we're looking at dollar yen, and we believe that 105, 106 could be the next stop. So let's have a look at the Japanese Nikkei 225. So what's actually happened? We've had two dojis or spinning bottoms, whatever you want to call them, after a huge sell-off in the Nikkei. Now, this is just showing uncertainty. We can see huge bearish bar, again continuation bar, but it instigated buyers came into the market, and then another strong sell-off, and now you've had a doji followed by another doji. So we've got indecision coming into the market. So is it finally going to find a bottom, or is this just a pause or a take breath until we see our next leg down to maybe touch these lows? If you are trading this, then on an intraday basis you'll be looking for breaks of this low and then pullbacks to get short. Dollar yen, right, this is the weekly chart, and this is what I want to show you. So this area here, this trend line and this support zone, this is where we were looking at taking our dollar yen trade long. Now you can see clearly that this market has actually broken through all key support levels. Okay, so our bias for taking any long trades now is out of the window until we see something in and around the 106, 105 area. So what we do have now is we've got a 300 pip void, 400 pip void. It's 300 from where we are, but if we get any pullbacks into late 109s, early 110s, then that's a great trading opportunity back down to 106s. On the flip side, intraday trading, just look at your market cycles, any break and retest support and resistance, and get back in and trade it down. This could be a pretty rapid move down to those levels. Then, if we look at the dollar index, this is on a monthly chart, would potentially highlight that we are going to see a further sell-off in the dollar index. We can see these monthly wicks of these candles here going back just over a year or so ago, and we can see that they came into this sort of 93 area, and we got a nice correction, nice correction, nice correction. So I would probably guesstimate that we're going to see the market drop into this area here before we see any correction, or we're either going to see it drop into the 618 around 92 flat even handle. So the continued sell-off in dollar could present itself. We may see that today after Mario Draghi's speaking. So let's see what happens there. Sit on the sidelines if you're not sure. Trade with caution or trade with the correct risk management. Don't put yourself in a position you can't get out of. One of my old trading buddies, he always used a fantastic line that I'll never forget, and I think it's brilliant for trading. He always said, imagine yourself as a pilot, and the best way of thinking about trading is, if I was a pilot, I'd rather be on the floor wishing I was in the air than a pilot in the air wishing I was on the floor. i.e., there'll always be another trade. Okay, so just sit on the sidelines if you're not sure. Don't think about getting into trades that you actually can't get out of. Euro dollar, now you'll see here we're at a key resistance level. This is going to be a tell point, I would say, for the euro dollar. What's going to happen? Well, we don't know. Will we see another spike through like we've seen here, or are we going to get resistance and a sell-off? In all honesty, my assumptions and my beliefs is we should get a sell-off, and I think that's what Mario Draghi will try and get across to the market. If not, and we do get a close above this level, we're going to see a big rally, and that's one thing that I really don't think the ECB want to see. Yeah, there's no point bringing in all this stimulus to see the euro rally back up, and next stop is probably going to be 120. I mean, we look through here. There's really nowhere for it to stop. This is your previous cycle low, and really, if you look through there, there's nothing else to stop this market. So if it does go, I think it'll go with a vengeance. So again, we have to be adaptable on this market and say, well, if it does break to the upside, we want to make sure that we get in on the act, because when it does go, we can look for a close above, and then any sort of trading method that you have to get into this market to take it long. Okay, and that should round us up for the day. Okay, so this is the end of the morning update today. What you're seeing there in terms of the clean charts, this is one of our systems called Phoenix Blue Pure. The system, or our style of trading for Pure, is clean charts, purely based on price action, key levels, no lagging or leading indicators, however you want to call it. We buy and sell with the banks stroke commercials, the market movers, the majority of the capital in the market, for example. We trade with fundamental bias, and we look for our technicals to align with that. We use commitment of traders analysis. If you don't know what the commitment of traders report is, please feel free to drop me an email on info@phoenixblue.co.uk. Predominantly in all FX markets, we use a stop size of 40 pips. If we go across to some of the cross pairs, between 50 and 60 maximum. And we're looking at improving your results by only taking trades where and when probability is at its highest. If you've got any questions about this video or about Phoenix Blue itself, again, please use the email address here highlighted, and I'll be happy to talk to you. If you do like the material that you are seeing on the morning updates, hit subscribe. This way you won't miss any, because you'll get an email sent to you as and when the videos are uploaded. If you've got any questions, drop it in the comment box or email us, and we're happy to have a conversation online. Okay guys, have a good trading day, stay disciplined, and we look forward to speaking to you tomorrow.